Hello, wishes to all of you dear students. Today we will solve one problem in case of sale of partnership. R Limited was formed to take over the assets and liabilities of A and B. The balance sheet of A and B on 31/12/2008 was as follows. We have trade creditors 8,000, capital account of A and B 80,000 and 80,000. Cash in hand, cash at bank, book debts is nothing but debtors, stock, furniture, land and building. The purchase consideration was agreed at 2 lakh and was to be paid as under 5,000 equity shares of rupees 20 each fully paid, 68,000 in 6% preference shares of rupees 100 each issued at par, and 20,000 in cash. All the assets and liabilities were valued as per book value except book debts which were subject to a bad debts provision of 5%. The company raised further capital by issue of 15,000 equity shares of rupees 20 each. The adjoining premises means premises here we mean property, the building. So the building which is next to us is called adjoining. Namma pakkadalli iro anta building ge ನಾವು adjoining premises anta ಹೇಳ್ತೀವಿ. So pakkadalli iro anta building were purchased for 1 lakh. An additional stock 1,40,000 was obtained from open market. Record the above transactions in the books of R Limited through journal entry and draft its opening balance sheet. So illi we need not prepare any ledger accounts in the books of the partnership firm. No realization account, no capital account, no bank account, no purchasing company account. Partnership firm books ಏನು prepare ಮಾಡಂಗಿಲ್ಲ, ಕೇಳಿರೋದು incorporating entries ಮತ್ತೆ opening balance sheet in the books of company. So company ಪುಸ್ತಕದಲ್ಲಿ journal entry na ಮಾಡಿದ್ರೆ ಸಾಕು. R Limited was formed to take over the assets and liabilities of A and B. The balance sheet of A and B as on 31/12/2008 was as follows. We have creditors taken over by the company. ಯಾಕಂದ್ರೆ ಪಾಯಿಂಟ್ ನಂಬರ್ ಡಿ ಅಲ್ಲಿ ಸ್ಪಷ್ಟವಾಗಿ ಹೇಳ್ತಾರೆ all assets and liabilities were taken over at book value except debtors at 5% less. So ಈ ಪ್ರಾಬ್ಲಮ್ ಅಲ್ಲಿ ಎಲ್ಲಾ ಆಸ್ತಿ ಮತ್ತೆ ಎಲ್ಲಾ ಸಾಲಗಳನ್ನು ತಗೊಂಡಿದ್ದಾರೆ. So creditors are taken over by the company. Capital account of A and B 80,000 to be ignored. Don't consider because we are preparing in the books of company. Cash in hand 2,000 taken over. Cash at bank 12,000 taken over. Book debts 18,000 taken over. Stock 78,000 taken over. Furniture 10,000 taken over. Land and building 48,000 taken over. The purchase consideration was agreed at 2 lakh. So lump sum method is given in the question. So illi purchase consideration ಲೆಕ್ಕ ಮಾಡೋ ಅವಶ್ಯಕತೆ ಇಲ್ಲ. So illi purchase consideration lump sum method ಆಗಿ ಕೊಟ್ಟಿದ್ದಾರೆ. No need to calculate PC. So PC is given in the question 2 lakh. So it is lump sum method. Dear students, kindly note. In case of lump sum method or net asset method, balance sheet will not tally. The differencing figure may be treated as goodwill or may be treated as capital reserve. So net asset method is given, balance sheet will tally. So net asset method ಮುಖಾಂತರ ಬರೋ ಅಂತ PC balance sheet tally ಆಗತ್ತೆ. ಆದರೆ lump sum method ಆಗಲಿ net payment method ಆಗಲಿ balance sheet tally ಆಗಲ್ಲ. So illi PC bandu 2 lakh. How do they pay the PC? Partly equity share, partly preference share, and partly cash. How do they take equity shares? 5,600 into 20, you get 1 lakh 12,000. Next, 6,800 into 100 rupees, you get 68,000. So 68,000 in 6% preference shares of rupees 100 each. So it is 68,000 preference share plus 20,000 cash, you get 2 lakh PC. So equity shares 60, 1 minute, equity share 5,600 into 20, 1 lakh 12,000 plus preference share 68,000 plus cash 20,000. All assets and liabilities are taken over at book value. So ಎಲ್ಲ ಸಾಲ ಆಗಲಿ ಎಲ್ಲ ಆಸ್ತಿ ಆಗಲಿ book valueಗೆ ತಗೊಂಡಿದ್ದಾರೆ, except book debts which were subject to a bad debts provision of 5%. ಹಾಗಂದ್ರೆ book debts is taken at 95%. That is 5% less. So they have taken over at 95%. The company raised further capital by issue of 15,000 equity shares of rupees 20 each. ಹೊಸ ಬಂಡವಾಳ, ಹೆಚ್ಚಿನ ಬಂಡವಾಳಕ್ಕಾಗಿ ಕಂಪನಿ ಬಂದು ಶೇರ್ಸ್ ಗಳನ್ನು ವಿತರಣೆ ಮಾಡಿದ್ದಾರೆ. The shares are being issued to the public for additional capital. So 15,000 into 20. The neighboring premises, adjoining premises means the neighboring buildings were purchased for rupees 1 lakh. So 1 lakh is called purchase of premises. An additional stock 1,40,000 was also purchased in the open market. So we have 3 journal entries for incorporating entries. 1 for taking over the business, 2 for payment of PC, and the third one is for taking over assets and liabilities. Now 4th journal entry will be for equity shares issued. 5th journal entry will be for purchase of stock. Record the above transactions in the books of R Limited through journal entry and draft its opening balance sheet. So PC 2 lakh given in the question. Partly equity share 5,600 into 20, 1,12,000. Preference share 68,000 rupees. Cash 20,000. Partly equity, partly preference, partly cash. This is the incorporating entries in the books of purchasing company. The first incorporating entry will be business purchase account debit to vendor firm account. So ವ್ಯಾಪಾರನ purchase ಮಾಡ್ತೀವಿ. So business purchase account debit to vendor firm account 2 lakh. This is the journal entry for business purchase. Narration ಬರಿಬೇಕು. Being business purchased. Number 2 for settlement of PC. ಎರಡನೇ journal entry. ಬೆಲೆನ ನಾವು ಯಾವ ರೀತಿ ಕೊಡ್ತೀವಿ? Partly equity, partly preference, partly cash. Vendor firm is a receiver of the PC, so debit the receiver. Equity shares are going out, preference shares are going out, cash is going out. Credit what goes out. Vendor firm account debit to 2 lakh, to equity share 1,12,000, to preference share 68,000, to cash 20,000. Third journal entry will be for taking over assets and liabilities. Cash account debit 2,000, bank account debit 12,000, book debts account debit 17,100. ಹೇಗೆ ಬರುತ್ತೆ? Into 95%. So 5% is treated as bad debts. Therefore we should calculate at 95%, that is 18,000 into 95%, 7,100 is called book debts. That is minus 5% bad debts. Stock account debit 78,000. Furniture account debit 1 lakh. Land and building account debit 48,000. To creditor 8,000. To business purchase 2 lakh. So students, ಈ journal entry ನೋಡಿ ಕ್ರೆಡಿಟ್ ಕಡೆ ಇರೋ ಟೋಟಲು 2,08,000. ಆದರೆ ಡೆಬಿಟ್ ಕಡೆ ಇರೋ ಟೋಟಲ್ 1,67,100. ಸೊ ಡೆಬಿಟ್ ಕಡೆ ಕಮ್ಮಿ ಇರೋದ್ರಿಂದ ಆ ವ್ಯತ್ಯಾಸ ಅಮೌಂಟ್ ಅನ್ನು ಗುಡ್ವಿಲ್ ಆಗಿ ಟ್ರೀಟ್ ಮಾಡ್ತೀವಿ. ಸೊ ಡೆಬಿಟ್ ಟೋಟಲ್ ಇಸ್ 1,67,100. Credit total is 2,08,000. Asset taken over and liability taken over does not match. So there is a shortage of 40,900. That 40,900 is called goodwill. As told before, net payment method, lump sum method, balance sheet will not tally. The differencing figure will be treated as goodwill or capital reserve. Here, since debit side, asset side is less, we call that as goodwill. If credit side is less, we call capital reserve. So we get a goodwill of 40,900. Fourth journal entry will be for issue of equity share. 1 minute. The first journal entry narration being business purchased. Second journal entry narration being PC settled. Third journal entry narration being assets and liabilities taken over. Fourth journal entry will be for issue of shares to public. Bank account debit to equity shares account being shares issued to public. Fifth, purchase of premises. Premises andre land and building property anta heltivi. So land and building account debit 1 lakh purchased adjoining premises. Pakka iro anta building ಕೊಂಡ್ಕೊಂಡಿದ್ದೀವಿ. Stock account debit 1,40,000. Stock purchase ಮಾಡಿದ್ದೀವಿ open market ಅಲ್ಲಿ. To bank 2,40,000. Being land and building and stock purchased. So the balance sheet, liability side, we have equity share capital 4,12,000. How do you get 4,12,000? Paid in the form of preference share, paid in the form of purchase consideration 1,12,000. So 5,600 share into 20 ರೂಪಾಯಿ ಲೆಕ್ಕದಲ್ಲಿ PC ನ ಕೊಡ್ತಾರೆ. Partly equity share 1,12,000 plus new equity share issued to the public, that's 3 lakh. So 1,12,000 plus 3 lakh, you get 4,12,000. Preference shares issued to purchasing firm 68,000. We don't have any debentures, and current liabilities we have only creditors. 4,88,000 is the total of the liability side. Now let us look at the asset side of the balance sheet. Furniture taken over 10,000. Land and building taken over 48,000 plus wasa purchase, new purchase 1 lakh. Total land and building 1,48,000. We get difference in goodwill. Balance sheet does not tally. Asset side is less, debit side is less. So 40,900 is called goodwill. And current assets we have cash in hand 2,000. Cash at bank we get 12,000. 12,000 is a bank balance taken over from purchasing, that is from vendor firm, plus 3 lakh we received cash from issue of share. Shares annu issue ಮಾಡಿ ಹಣ ಪಾವತಿ ನಮಗೆ ಬಂದಿರೋದು 3 lakh. So 12,000 plus 3 lakh minus 20,000 minus 2,40,000. What is this 20,000? That is cash amount paid in the form of PC. Purchase consideration, we pay partly cash. That's a payment minus madi. Then we purchase land and building 1 lakh, and then stock purchase 1,40,000. total 2,40,000 purchase of land and building and stock. So bank balance comes to 52,000. Then we have stock taken over 78,000 plus stock purchased 1,40,000. Total stock comes to 2,18,000. Then we have debtors taken over 18,000 into 95%, we get 17,100 less bad debts tagondre 17,100. So total of the balance sheet is 4,88,000. Thank you.